Well, we now have a management joining us. And remember, Quess Corp had announced a three-way demerger of its diversified businesses, which will result in three separately listed entities. Now, the two entities that are about to list are Digitide Solutions and Blue Spring Enterprises. The record date for the demerger has been set on the 15th of April, and the shareholders of Quess Corp will receive shares of Digitide and Blue Spring, which will mirror the existing shareholding patterns. And both the companies, Digitide and Blue Spring, are expected to commence trading on BSE and NSE in the next 2 months, of course, subject to regulatory approvals. But now we are joined by Guruprasad Srinivasan, who's the CEO and member of the founding team of Quess Corp. Hi, Mr. Srinivasan. Thank you so much for taking the time out and joining us today.
Thank you so much. Thanks for having us on the show.
Mr. Srinivasan, firstly, tell us how will this demerger into three separately listed entities, how will it unlock investor value? Also, how will it improve operational efficiencies? And what is going to be the strategic plan for the three companies going ahead?
Sure. So first and foremost, happy to share that we are very thankful for the entire NCLT process. We were able to get this entire demerger process, concluded exactly in 1 year. So thanks for the efficiencies that came in handy for us. First and foremost, demerger is done basis to bring in much more sharper focus to each of our platforms that we were operating into. Number two, it also helps us to bring the corporate structure simplification. And number three, brings a very unique position in terms of accelerating our digital journey for each of the platform, bring in much more innovation and agility into the business. So from that standpoint, last but not least, it also helps us to pursue our investment strategies in each of these platform the way it is expected to be for the platform. So what does it mean? These are now Quess Corp is going to be the remaining company, which will be the workforce management company. Digitide Solution will be the tech services company. And we have Blue Spring, which is infra services company. So each of these entities catering to three different market segments, and yet, continues to invest on its digital journey as we move forward.
All right. Good afternoon, Mr. Srinivasan. This is Srishti also joining you. But there's been lots happening globally, and what we understand that Quess Corp for now drives over 20% its revenue from the North American markets. What we are seeing is that there are concerns in that market, and definitely the news flow around tariffs. So help us understand that as a company, how are you looking into this whole tariff situation? What could be the likely implications on the demand scenario, at least in the near term, and in the medium term? What are the projections?
Sure. As you rightly said, total impact of international revenues for Quess is have been below 20%. So if I were to really break that further into by each company, Quess Corp would have the least in terms of presence in North America. So majority of our business is India, and small portion comes from the Asia Pacific region. So we really don't see an immediate impact into Quess Corp. When I talk about Digitide, yes, we do have operations. About 20% of our revenue comes from US. However, the segment that we are into is kind of lifeline in terms of the customer service management or customer expected management. So from that standpoint, we are not seeing any immediate impact. It's more of, I would say, a kind of most required kind of service which we are working with our customers in terms of catering to. However, the third platform is Blue Spring, which is completely India story for us. So that has a direct impact or the direct growth of how the Indian real estate or the entire capex investment is going on, which is really good. So we are still seeing a lot of capex investment happening in India. So from that standpoint, Blue Spring would have probably negligible impact. To some extent, it will definitely indirectly impact, not a direct impact. For example, the consumer, the first hit is going to be on the consumer side. So we might see our staffing business probably, may little take an impact in terms of lesser deployment for Q4 and Q1, which we are experiencing. So it would be interim on a short term, but definitely, I think Q2 onwards, it should set back in terms of the local demand as far as we are concerned, because we have festivities around, the season is around. E-com is going to boom between Q1 and Q2. So I'm sure, I think, it's interim and Q2 should be fine for us.
Srinivasan, let's talk about Digitide because you have set some lofty targets. Let's talk about your outlook for revenue and EBITDA because the targets that you set for it was $1 billion for Digitide from the $280 million target. Now, what will drive this growth, and when do you hope to achieve this?
So that's a long-range plan that we have given. By 2030 is where we expect this business to aspirationally go towards $1 billion by size. So having said that, we are building the blocks to reach there. So some part of it, I would say about doubling from where we are would happen organically, and there would be some inorganic as well as we move forward. So combination of both is where we are going to get to $1 billion. However, this business grows at an average revenue growth of about 12 to 13% in early teens. But however, their EBITDA growth would be non-linear. They would grow about 15 to 16%. So from that standpoint, we are probably slated well to reach what we have committed for.
All right, all eyes on that. That's a long-term target that you have set. But Mr. Srinivasan, what's been happening with the company is that you guys have been focusing to reduce your debt profile and your debt on the books. But given the near-term hiccups that you just talked about, help us understand that for the full year, any projections that are already in line or already in works where we can see your debt profile improving going ahead?
So if you look at our this year performance itself, debt profile has improved dramatically. We started at almost about 300 crores and we are down to about 240 crores by Q1. We have almost repaid about 146 crore of debt in last 9 months, but that is for first 3 quarters. Some portion of that would be impacting, we would be repaying reducing in Q4 as well. When we enter now, the debt levels are almost negligible for each of the platform as well. So from that standpoint, we are doing well and our debt levels are extremely negligible. So we would continue to be that way as we move forward. So probably the aspiration is to get to, when we exit this year, we want to be a debt-free company.
Finally, Mr. Srinivasan, what is your outlook in terms of the competitive intensity for your mainstay staffing business?
So there are a few sectors which are doing extremely well. So for example, manufacturing is where we are seeing a lot of demand coming in, followed by BFSI, we are seeing demand coming in, plus retail continues to be still giving us the position. So between these two, we still continue to grow. However, the attrition rates are also pretty high. So at the moment where we are still backfilling a lot. So from competitive standpoint, if you look at, we have been at a gross, we have been adding almost about 100,000 people, associates every year. And we have been at a net add of about anywhere between 50 to 60,000. So FY24 would be slightly lesser than that, but FY26, I think we are slated again getting back to adding upward of about 75,000 headcount in a year.
Srinivasan, with this, we let you go on that. Really appreciate you taking the time out and speaking with us. Exciting times ahead for the company. So we'll watch out for that and hope to have you soon.
Thank you so much.
If you like this video, then like, share and subscribe to ET Now.